Good morning. This is Narendran. Welcome to Nifty prediction. Before going to the 5-day market, I would like to review the Thursday's market as well as our group calls and predictions review. Let's go to the Thursday's market closing. Nifty ended up in the positive 11,834.60, 95.75 points in the positive, 0.82% in the positive. Opened around 11,835.40. Low went around 11,791.15. High went around 11,905.70. Let's go to my prediction review. In my group calls, I have updated on Wednesday itself. Anything closing 11,696.25 above, indicating bullish for Thursday. If anything below this particular level, indicating bearish. So above means bullish. So we know that it is closed above that particular level on Wednesday, 11,696.20. Above means bullish. So please note that. So if anyone would have saw that, means they would have bought some call option. That is what the indication is. Nifty is above closing, indicating bullish. So if we check where it has closed, clearly it is closed above that. Previous closing is 11,738.85, which indicating bullish. So clearly around 3 o'clock in the Wednesday market I have given that. Then on 8th, we know that I already told about the par value. Anything opens above 94.25 points, indicating the market with a target of PT1 and PT2. I'll come to the point next. So where the market is open, so 11,833.10 is pre-opening. Opening above, then it is starting with the target of PT1. So 11,833 above 2 point it has opened. So clearly it has pointed the target of PT1 and PT2. So PT1 is nothing but if you check the PT1, which is the target of 11,889.12, followed by 11,945. So PT1, then it has to go towards the PT2. But today's market high is 905. So if you take the average of those, so it comes somewhere 917 or something. But I'll show you how we gone with that particular thing. So after the pre-market opening, so we already given this particular kind of 11,750 call option for 1 week holding, which is, I'll show you when with 6th October it has given, because it's kind of a option which we bought 11,500 for 44, and the insurance, if anything goes wrong, this insurance will be getting covered. So 11,750 call option is the insurance we bought, which both put together come somewhere around 56 points. We need to hold it for a 1 week tenure, which will give us exit of 100 to 120. Today we exited somewhere around 130. I'll show you that. Here it is. And one more which we given another 1 week holding, which is that this particular both 11,300 PE and 11,700 CE, both put together we bought it somewhere around 50 points. So holding for a 1 week tenure, 1 week is the holding. So anyone will go more than 100 plus. So we used to get double the money, but today we exited somewhere around 170. So that is the idea behind that, those, because it is a kind of a calculated matching. Today we exited, I given somewhere around 160 plus it will go, but morning it has opened somewhere around 140 or something. So that is the indication pre-market opening itself around 9.6. So those two we got some good profit, because in this we bought it somewhere around put together 50, so we exited somewhere around 170, so 120 points is the profit. Here it is somewhere around 57, and we exit somewhere around 130, so it is somewhere we got some 60 odd points, 60 to 70 odd points in that. And this is the pre-opening. After pre-opening 9.8, we came to know it, as per the pre-opening the targets activated PT1 and PT2, so 11,889 and then followed by 11,945. And so this particular 1 week holding which we are having, this particular call option is going to give a good profit. As expected, it was hit more than that, but still I asked to exit somewhere around 140 plus. If it is gone morning itself around in the pre-opening itself, it has hit 150. I don't know how many have exited 150, but I used to give calls after that only. Most of the clients will get exit. And 11,750 also around 92. We waited for the call, and it has both combinations worked pretty well. These are all the double combinations. This is one set of combination and the other set of combination, so both worked pretty well, but they need to wait for the call. And this is another set of combination for the 15th of October. The both put together we used to buy it somewhere 55 less than 55 points, so which means it is going to be somewhere around maximum risk of 4,125. So the idea behind this, we need to hold for a 1 week tenure. So that call also given around 935, and this 11,700 reached around 160, but still the exit call was not given. Low is not matching. This is the indication we got it around 947. Low is not got matching, so one small put option we need to buy it, because the low is not matching means after reaching it will come down towards to the low on break. So I asked to watch out this 11,850 put option for 20 for the risk traders, but while riding it, it came down to 19 point something and went up somewhere around 22. But in my chart it is not showing the low, but somehow I found out that it is a error in the other app. It shown the low 19.95, but still buy call was not given. We know that 5 minute charts also indicating downfall is expected, but still our target needs to hit. What is the first target? The first target is nothing but the PT1, which is this particular level. After this reaching 11,088, 11,889, then only we need to buy that put option, because that is the way we used to buy. So we waited for the call, and once almost reaching to that level, so I given the call to buy at 15 rupees, 11,850, 15 rupees with a target of 30 plus, and outside chances it might go up to 66 too. So the bearish is getting catched. So we bought it somewhere in the 11,950 call option for 2 to 2.5, which is a hero zero. Why? Because normally if it is reaching the positive target 2, it may go fly around 11,945 is the positive target 2, somewhere around 950. So which means if it is goes means this particular call option may go to some 10 to 20, so which is a small bet. So that is the reason. And this 11,700 final call for the exit given around 170. It was traded around 174 but it has went up somewhere around 210, but that doesn't have a problem when we book the profit, because that is the way it is. We need to keep some safe exit. Some that is also I have given specifically, whoever want to take some more profits, they can keep stop loss to take. It is up to their individual. I want to exit somewhere around 170, that is the way, because we bought it somewhere around 50 round, so 120 points is the profit which we got. So this is the idea which the low is not matching, we got it. So once the market is trying to go towards to the positive direction, if it is not falling, the low is not matched, but still somehow the bullish is intact. So if it is goes up, means this 11,981 is possible, which is CPR R4, but there is no surety. It is not going to go anyhow, but it is having a slight chance. That is the reason we took this particular call option for a small hero zero. And as expected, the positive target one, which is PT1 target, done 11,889 at the time of 11:24, and the final call for the 11,750 CE also given at around 130, while given that 130, it was traded somewhere around 137. So both we got exit some good profit on the weekly basics. And the PT2, which is positive target 2, around 11,955 still is on the cards, but the low is not matching. So Nifty may struggle to reach that level. So we know, we already saw so many times like that. So even Nifty may not reach that level too. So don't bet too much, because that is because sometimes we give two targets. If the one target got it, then people will go for the second target. So but we got the indication that low is not matching. I'll give you that, because that is the way. The high is matching, but the low is not matching. So it will try to come down and cut the low, which is the next target will be 11,808. So we know that level. So that is the reason, even if it is the Kazir was trading somewhere around 11,886 after hitting the target. So we want to play much more safe. Already it got it that target, which is our first target, is 11,889. So we want to play safe from that level. If it is fall down, it may give 90 points, so we need to book profits. That is the idea. So the clear message was given, the market will try to fall down and reach 11,808. So if that is the case, then the 11,850 PE will give an exit somewhere around 30 to 40. So still waiting for the call. This is as per our rule, because that level, the 11,808 is as per our rule. But still the bullish rule is also there with the stop loss not at broken. So we need to wait patiently, because if it is not breaking this specific R2, the CPR R2, which is 11,844, then it may try to go reach, and 11,925 is also possible. So we need to wait. As per our data, it is going to fall down. Low is not matching. So if low is not matching, means CPR R1 has a good chance to get hit. That is what the message here given. So as per the CPR formula, so CPR R2 is not able to hit the breaking. If it is not breaking, so that is what the given, it will try to go to reach CPR R3, which is 11,925. But still low is not matching. Clear message, low is not matching. So Nifty will try to fulfill the low, because it is the way it is, because my formula is unique. It is works pretty well. So we know that if the low is not matching, the Nifty will come down and cut the low. So we expect the CPR R1 as a target, because we already know one more target, which is 11,808. After the low, this is the next low. So if if we compare with that low, which is not much difference. So CPR level is showing 11,791 and our low is showing 808, which is having a difference of somewhere around 17 to 18 points. Once the market is falling from the high somewhere from 11,905, which is almost 100 points. Once if it is falling 100 points, this 17 points just like that it may hit. So we used to keep that target as well. So I asked to buy, because the once we bought it somewhere around 15, it went low around 6 to 7, it went even 3, but we bought it somewhere around 6 to 7 once again, and the market started to fall. Nifty started to fall. So one lot we kept two lots, because we bought it somewhere 15 and we bought somewhere around 6 to 7. So one lot we exited somewhere around 16, because this particular second lot we booked profit around 750 rupees. But I asked to keep one lot, because while given the exit, it was traded somewhere around 21, and I asked keep one lot in hand, because we will try to exit at the maximum price. So that is the way it is. I took one, because one account I had only 113 rupees in the account, so I wanted to bet some small amount. I bought and booked profit around 500 in that, which is nothing but 11,800 put option. I bought it for 1.2 and exited somewhere around 18. It went 20, but some which is low price I wanted to exit. And this specific another 11,800 and 11,900 both put together, we bought it somewhere around 12, because this 11,800C and 11,850P both put together 4 and 8 total cost is 12. So we want to exit somewhere around 30. That is the idea, and exactly it was happened, and we exited somewhere around 30 as expected. It was traded 34 after we bought, and we have one more lot in the hand to exit some higher profit, that we exited somewhere around 50 points. So it went up around 56. So asking to exit somewhere around 50 plus, because it was traded around somewhere 56. Our target is 66, but still I don't want to take risks. That is the reason I asked to exit somewhere around 50. So today is a very good day, and as expected the CPR target won, and the market is also exactly hit that particular level 11,791. So everything's got good, and we bought it one more lot in the hero zero option for 3 to 4. It went 0 today, so we booked some good profits today, somewhere around 750 in one particular lot, and then this option both put together, we exit somewhere around 30,350 each. One lot only I am calculating. Some customers may buy 2 or 3 lots, I don't know, but this is as per one lot calculation, and we bought it somewhere around 15. That some people have exited with the stop loss of 30, and some people not exited with the stop loss, so they book profit around 50, which is having difference of some 1,400 rupees profit. So all put together we got it somewhere decent today, decent profit around today's calls itself around somewhere 4,500 or something, and the previous 1 week which we booked uh, somewhere around 60 to 70 points and 130 points, so almost 15,000 in that. And the surprising part is that the low exactly matched in the data, 11,791. If you take the average, if you go and check the par value, which is matching exactly to the CPR level as well. That is what my point, and today's low as well. and the CPR also matching. That is the way it is, and today's closing value is almost to our par value. Today's closing value is almost to our par value. That is the mention. That is what I mentioned. So it is a pretty good day for us. And let's go to the prediction for Friday. The Friday indications are showing all are in the positive. So 9 is to 7, average 3 is to 0, absolute frequency 6 is to 4, weightage 3.31 versus 2.74. All indications are in the positive. So the pre-open must have to be in the positive. If the pre-open is in the positive, then we may see one more good bull run. But I would like to point out here one particular thing, which is I missed out a point. Normally I used to give that specific point while the market was trading around 310 to 315, but I somehow I forgotten to given this because 11,848.43, anything the Nifty is closing above that level indicating bullish, anything the Nifty is closing below that level indicating bearish. So the Nifty was closed below that level. So 48, the market has closed, the Nifty has closed below that level 834. So which means Friday is kind of a bearish day, but we need to play little cautiously. Why? Because the data is showing bullish and the trend is showing bearish. So we need to play little more safe on Friday, and small traders better avoid trading on that particular day, because if anything opens even 1 point in the negative, it is going to be tough to trade. Why? Because all 4 indications are showing positive, and pre-open is opens in the negative means it might go bearish as well. So as per the basic rules, if anything opens below volatile level, which is 21.30, below that level indicating bearish with a stop loss of overall average 11,871.85. This is the stop loss we need to maintain and go for a sell. If anything opens above this particular volatile level, which is 87.58 points, above that level only indicating bullish with a stop loss of 11,851.80. So this is the stop loss. So anything in between opening with the volatile level indicating a volatile market, but if anything breaks, then it might catch bearish. On anything breaks the volatile one, it might catch the bullish. So we need to play much more cautiously on Friday. Small traders better avoid trading this specific day because it is not going to be easy. But if you know the trend, you can trade with a minimum risk of 750 rupees. That is because you can able to easily recover that particular loss if it is. And one more key point is that anything breaks the bearish open target level more than 100 points indicating the bearish to any extent, may go to any extent. So I need to, and this is the par value for Friday. Par value we have 11,871. So if the pre-market opens below this level indicating the target negative target 1, negative target 2 and negative target 3. So normally the up to that negative target 2, after that it might hold. If anything extremely bearish, only the negative target 3 will go. So we need to watch out the pre-market opening, whether it is going to open above that level, because if anything opens above that 36.90 indicating the positive target 1 and positive target 2. So we need to watch out pre-market opening, whether it is going to open 11,871.50 above or below. If above means it is going to be bullish. So let's see how the market is going to give us on Friday. Thank you.